Hello, and welcome to the Deal Breakdown Podcast. I'm Wesley with Maton Real Estate, your buyer specialist.
And my name is Phong Tran Property Group. I'm your seller specialist.
And together we are the Deal Breakdown. Welcome to episode 10. And Phong, as promised, we have a guest. Would you like to introduce your guest?
Yes. So the Deal Breakdown audience, people, I'd like to introduce you to my great friend, lender, Mr. James Sand of DC Lending. So James, go ahead and introduce yourself. Tell us a little bit about your background, how long you've been doing this, and yeah, go for it, man.
Absolutely. Happy to be here. Thanks for the invite. So I'm James Sands. I've been in mortgage for about 9 years and own and operate DC Lending. I've kind of been all over the place within lending and production, out of production, training. The market dictated that I need to get back into production, so I've been doing that, really enjoying that. But it's been a wild ride, and something I'm really excited to be doing.
Yeah, and then you touch base real quick on, you said the market dictated you to go back into production. Tell us a little bit more about that. Was that like due to COVID and the lower interest rates, so then suddenly it dropped or shot up?
Yeah. When I first got into mortgage, I was about 24 years old. And at that time, it was about 2016, 2017. It was majority was purchases. I don't think I ever touched a refinance until about 2020. Doing those was really surprising. I'm like, wow, there's no realtors. There's no close date. This feels like a fake loan. Like, how are we even doing this? So it was a cool time to be in the business. Definitely had drawbacks, because you get used to refinances and you become a number and people are shopping refinances left and right. When I started, it was all purchases, got really used to that. And then around 2020 and 2021, when the rates were extremely low, we were like a refi factory. I was bringing people on to the company almost like it felt like one a week. So we scaled up pretty big to about 31 or so people in the company, a lot of refis. We still did some purchases, but it was almost as quick as it started, because when they dropped rates, it was really quick. And then when they brought rates back up, it was also really quick. So I've referred to it as sort of a whiplash in revenue, to where you're trying to, for the first time, you're like, oh my gosh, can we even handle all this volume? And then you go from that, getting all your systems, getting your staff, you get staffed up to handle this volume. And then it was like, in 2 months, the volume's not there anymore. And so it was like, oh my gosh, I went from training, hiring, kind of overseeing, to like, oh, we went from 50 loans to 10 loans. So that was like, okay, time to go backwards to where we were at pre-refi boom and sort of undo what we just did and try and keep everything going. So it's adapting to that swing.
Gotcha. No, that totally makes sense. I know, and again, James, appreciate you being here. We really do like having someone else besides two realtors here, brains to pick. And I think that's very interesting to talk about. And, I wasn't a realtor in the boom, if we want to call it that, the 2020, 2021 era. And obviously, I think Phong, you as well, started pretty much right before me.
Right at 2021, but wasn't really involved too much with actual production.
Yeah. And so for us, we saw this mass exodus away from being a real estate agent. And I know there was all these memes and jokes about everybody knows a realtor. Everybody's becoming a realtor because these rates are so stinking low and everybody's bidding over asking. And now we don't obviously see as many real estate agents. Is that kind of the same? Did you see this mass exodus away from lending, or?
Yeah, 100%. I wish I had statistics, but it's like, I could only imagine I think I've seen some stuff around 70% of the loan officers who are here and are no longer here. So it's a lot. It's major. And I witnessed, I don't know if it's an exaggeration at all to call it a bloodbath. I saw people getting acquired. Multiple companies around here, big retail companies you've heard of, got acquired. And people don't generally get acquired when stuff's going super good. Sometimes it works, but in this case, it was, I think, people needed to join forces to make it through. A lot of loan officers got in, a lot of them got out, and every year you can see how many renew their license, and mass exodus is a good term.
And we're definitely, we're talking a little more in the weeds here as professionals. And so for this podcast, we also do touch a lot with first-time home buyers, people that have really not been in the scene really ever. At the same time, we do put this out to people that are very versed in this arena, if you will. And so to hear that 70% left, and Phong and I talked about this statistic a couple episodes ago, and that last year, 74% of all real estate agents did not do a single transaction. Would you say that's pretty similar in the lending business?
It probably is.
Yeah.
I haven't heard of a stat, but I've noticed that real estate and lending usually follow a very similar curve.
Absolutely. Yeah.
I think that generally the real estate and lending worlds follow a very similar trend. And the only times it can really be different is if it's, refinances are really super heavy. That can be a major difference to where there's a lot more lending business. And then, on the flip side, realtors have a lot of cash buyers at different times. Rates are really high, a lot more cash comes out, and that makes the lenders, a little bit less, you don't need them anymore.
It's a good point. I didn't even think about
Situations
that.
like that, but I'd say broadly what's happening in real estate as far as competition and how many people are in the game usually follows a similar trend.
Yeah, very good point. The one thing I do want to talk about, and then we can move on to something else just on this subject. It felt like in 2020 and 2021 with the realtors that I knew, it was you opened a door, you signed a contract, and you got the deal done. And it was almost like there was no skills necessary, no sales skills, you didn't really need to know too much, I'd say, about a home or inspections, because a lot of people were waiving them. And now we're in the era where you really have to set yourself apart to make it in a tough market. So my question with all of that would be, what are some things in the lending world that you've noticed allow lenders to stand out amongst the rest? What sets you apart?
Yeah, I think there are probably a lot of similar character traits, to be honest. It's at this point, you can't really get away with just having a license, or what a lot of people talk about is like, oh, I close fast, or I close on time, or I have these really great products and my rates are really competitive. And it's like, cool, bro, like that's the job description. Just describing the job of a loan officer and saying you can do that is kind of the bar. So I think as far as what makes someone go above and beyond is, for one, consistency is a major thing. For longevity in the business, there's and I've experienced it myself, times of high motivation, and then there's times of like, wow, stuff's getting pretty hard. So I think people who can stay in it for 2 or 3, 4, 5, 6 years to where they can sort of transcend past just consistent, then it becomes dependable, reliable. It's like, this person's a staple of the business, and I know that if I send a client to them, they're going to follow up with that client for 2, 3 years. They'll still be in the business. They're not going to go get a second job or go like, oh, it wasn't for me. They're going to get out. So I noticed that almost on the inverse, when you get in the business and you go try and market yourself to real estate agents, they're like, I don't know if I want to bet on you yet. Like, let's see you last for a year and a half. I don't want to send you a bunch of clients in your first 6 months, and then in 6 months from now, will you still be there? So I think point A is consistency, dependability, and then I think there's just a certain level of grit. It's just like, I refuse to lose to this business, to the market, to the clients. I've already sunk 8 or 9 years, or in some people's cases less or more. 2 years in the business, I haven't, what's the phrase? I haven't come this far to only come this far, type of a thing. So I think it's consistency, but this level of grit to where you're like thinking back. Because for me, I thought back about people who were in the business in 2008 and they made it through that. And I always admired those people. And so this was sort of, I think 20, the whiplash coming back was my like 2008 in quotes. It's like, I want to make it through this.
Completely agree. Yeah, and I really love what you said. You said grit. Like, that is such a powerful word. I mean, Wes and I, we can talk about that for realtors as well. I mean, if 74% of agents last year didn't sell a single house, I mean, with the changing of the interest rates, who's only working right now? People who know their job, true professionals, they're not just opening doors, they're not just signing loans, but they're actually going through the mud. We're in the trenches together to get to the closing table.
Yeah, could not agree more. Grit is, if you haven't read the book, listeners, or the two people here, I will let you borrow it. It's called Grit. And it speaks to, first off, the consistency you were talking about. I'm a quote guy. I like books. Musashi, Mr. Best Samurai Ever, he talks about, the way of the one is the way of all. And I think it speaks volumes that you've been in this business for 9 years, you said, right? And so let's say we're watching a UFC fight. Do you watch UFC, James?
I used to.
Oh,
Yeah,
that's
but
okay.
lately I've been seeing I feel like it's heating up again. It's all over my algorithm. So
Heck yeah. Well, people have seen people fight. And something that we would consider is, look at this guy. He's a black belt in jiu-jitsu, and he's done it for 10 years. Or look at this white belt. He's been doing jiu-jitsu for 1 year. My trust in who would win that fight would squarely land on Mr. 10-year. Yeah, because he's been through it. He's gone through all the little things. And I think it's similar in lending, and I think it's similar in real estate, and really anything, is if you have the grit to stick it through, you're going to be able to learn the lessons that the people that didn't stick it out could, right? And so it's nice to hear that it is consistent in both realms here, lending and real estate. I think that's great. And let's move on to some questions. I'd love to send some questions your way, James. Phong, do you have one? Because I don't want to hog. As the buyer specialist, I don't want to.
Oh, no. I mean, you're the buyer specialist. And so, of course, your thought process is going to be a lot different from mine. But yeah, I mean, I think the first question I have for you is, let's go back to, when did you see such a change in rates where, 75%, 50% of lenders left the business? What part of the year was that? Was that like 22, 21? Where did you
Yeah.
see it?
Yeah, I think it was steady, but I saw a big change in 22.
I
And
see.
I think what was happening is 2019, 2020, 2021 was so amazing that I think a lot of lenders still had their front. They had a front up because it's like, oh, everything's going super well. People are buying cars, buying houses, spending money. Everyone has assistance, and everyone's just kind of living a little bit too large, which was a good lesson in general. But around 22 is where I personally started noticing, oh gosh, stuff's tightening up. This doesn't feel like it did 6 months ago. And I started to get a little scared. And I was thinking okay, now it's time to really dial in finances, and rates seem to be moving a little bit, but also business is just something's gone weird. By the end of 22, that's when it was okay, stuff is definitely off a little bit. And I started seeing memes of loan officer coming in the business at 21, and then 22 is just they get punched in the face or some meme like that. It's okay, other people are starting to address this, and we're not all pretending that everyone's still doing well.
It reminds me of, I don't know if you've guys seen that real estate movie about the Great Recession, The Big Short,
Mm-hmm.
where the banker goes to, I think, Vegas or somewhere, talks to a couple bro lenders, and they're pretty much douchebags, frat boys, fraternity bros. And they're like, yeah, I mean, we signed ninja loans and we need to do 15 of them to buy our next car or whatever. And so would you say during that period, people were just living too lavishly and you noticed it? Before it actually happened, or was it more of you were being more reactive versus proactive? What do you think?
Yeah, I think first I love that movie, and that's one of my favorite scenes
Oh, it's
ever.
a great movie.
He has a boat, like
Yeah,
in a strip club. It's just
yeah.
hilarious. That the strippers have three houses or whatever. But I think it was over a course of time. It's interesting in this business because you're not on a salary. And so everyone has this idea of, I'm building my business. And when you start building your business and business is going well, your lifestyle can inflate. And so it was over the course of 2 years probably where people were doing well. And 2 years is long enough for someone to say, okay, I'm about here right now. The only thing was no one knew what was coming in the next 2 years. So I'm not sure if people were really, I think there was an element of people were living lavish, but there was also an element of, hey, this isn't like we just started making money 2 months ago. This is for the last 2 years that I can remember. And that's long enough for a lender to give you a mortgage based off your history. things are definitely inflated. So stuff's easier right now, and I think you grow accustomed to it. And so once it flipped back around, it was hard for people, I think, and myself included, to go realize how bad it was going to get. So a lot of us adjusted, but I don't think, well, clearly a lot of people went out of business. So there was a lot of people who didn't adjust quick enough. And thankfully, we are small, nimble enough that we were able to.
Yeah, I have one great question, unless you have another question. James, so talk to us, or to our audience, our viewers. Tell us a little bit more about the difference between a online lender, a mortgage bank lender, maybe it's like a Wells Fargo or US Bank, Bank of America, versus a mortgage broker, which is what you are.
That's a really great question. And a lot of people don't know the difference. And candidly, a lot of people in the business don't really know the difference for a lot of years. So your online lender, there's going to be all different types, because technically all of us can be online. So you can, as long as the company can service the state that you're in, there can be lenders who are nationwide where you can get a mortgage. If you go on bankrate.com, you can work with them. So on the retail side, they have their own options, which, let's say if you go down the retail path and you end up getting denied, you can't really, there's not another company or another wholesale lender that you can go with. So they kind of have a final say, where a mortgage broker in the broker channel has been sort of taken over the world in the last 5 to 7 years. And I'm going to be totally honest, a lot of the retail places don't want to admit it, but a broker is the best place to get a mortgage. And a lot of retail places are invested in making sure their loan officers don't know that. Because a broker channel, you make more money. First of all, I've done research. I've gone into retail lenders and figured out their comp plans, done a little recon. So it's pretty much undisputed that a mortgage broker is going to have the most competitive rates for clients, first of all, because you can shop around. There's 200 different wholesale lenders you can go with, rather than just one if you're in a retail spot. And if you start your path down with one wholesale lender and you determine, oh, this isn't going to work because of X, Y, and Z, you can say, okay, thanks for the information. Now I'm going to complete this loan with this B wholesale lender, knowing what I learned from the first one. Now we're going to close it. The first one's appraisal came back whack. Interesting. Let's try, instead of rebuttaling it, which never works, let's try, and I'll eat the cost as the broker owner of a next appraisal, and let's try it on this one, see if this appraiser comes back where we need to. So I think that the bottom line of it is there's options, and additionally, I look at brokers like they're as efficient as possible. So there's wholesale lenders that you have access to all their tech, like UWM. You can use a lot of their stuff, and they're a multi-billion-dollar company. So I look at that's the engine, and my company can stay small and lean while using their stuff. And so what happens is I don't have branch managers, regional managers, X, Y, and Z manager who is getting an override, and I don't have all this overhead. And the overhead has to go somewhere. So it goes to the client, or it goes, in addition, it goes to, hey, loan officer, I'm going to pay you 70% as much as a loan officer who worked at a mortgage broker. So it all has to come from somewhere. And in order to not go on and on and on, because there's so many differences, I'll kind of leave it there. But I guess the last thing that I will add that I think is important is dependability and consistency. Communication is going to just increase and increase the closer you get to the broker world. So your bank you're going to be a number. Your US Bank, Chase, you're going to be a number usually, banker hours. Your loan officer isn't going to be as attentive. Retail, much improved. And some retail lenders, if you're listening, I'm sure you communicate great. And then mortgage brokers, there's going to be, I have my own personal cell phone number is the company's number. So people can get a hold of me 24/7.
I'm so happy you brought that up. That probably the number one value prop I give to my clients to go with a mortgage broker like yourself is communication. I think that is the number one thing that we do as real estate agents and as, mortgage brokers. I always say stuff will come up on Sunday. I'm getting a hold of James on Sunday if it's urgent enough. I'm probably not getting a hold of Joe at Rocket Mortgage or Sally at US Bank.
Yeah, I mean, James and I, we actually have a great quick story. Essentially, I hit up James on a Sunday. I think it was like 3 o'clock in the afternoon. We just finished a showing with one of my clients, and I was like, "Hey James, I need to get a pre-approval so we can submit an offer." We had a deadline, which was the following day, and we eventually got them under contract. And that's the difference, because, like you said, James and Wes, if I'm calling Wells Fargo, or if I'm dealing with a Wells Fargo loan officer, they're not going to get back to me until 8 o'clock the next day, exactly bank hours. And so, yeah.
That's so important. I wasn't saying it. I'm glad you brought it up. That is the exact scenario I was talking about. Rarely for real estate agents here, rarely do we have any like contingencies or anything like that are due on a weekend because it's not a business day. What I'm seeing, at least in the last month, I'm competing constantly with my clientele, and I probably because the sun's out, but I'm competing constantly, and I'm seeing these, Monday 10 a.m., Monday 5 p.m. deal, what do you call it? Offer deadlines. That's the word. Offer deadlines. And that being able to give someone like yourself, James, a call on Sunday to put together a pre-approval for a potential home for someone that they might live in for 10 plus years. It's small. It seems small. But holy crap, it goes a mile.
Well, absolutely. And something that James, and I'm sure other mortgage brokers, I know Cody does it too, is the difference a lot of the time is you guys are calling the listing agents before, whether the offer's in their email is like, "Hey, so-and-so, I have this buyer, they're great financially, yada, yada, yada." And I think, like you said, Wes, that type of communication goes a long way, because as a seller specialist in this industry, whenever I'm receiving multiple offers on something, whether it's an online lender or just two other offers, maybe it's potentially two mortgage brokers, but the difference is communication. I mean, that goes a long way. I mean, will a seller eat $5,000 because one mortgage broker lended or essentially communicated a lot more? Absolutely. There's a very high chance.
Yeah, I'm glad you brought that up. So my hours are set on my Google My Business to 8 to 8, just Sunday through Sunday, because I always think of the client who it's 6 o'clock on a Friday and they're like, "Oh, everywhere's closed." So I try and make sure that mine says open, or someone who wakes up in the morning and they're like, "Oh, the bank opens at 9. I won't be able to get anyone on the phone." And I think there's like an element of instant gratification that we all want now with Amazon.com. So being available when someone's in the moment on a Sunday or a Saturday, they're like, "Let's just buy a house." They just went and drove around with their family. Getting someone in the moment and being able to say open, I think, is important on those hours that banks are closed. And then I also agree with you 1,000% with you being the listing agent, is I know my pre-approval has more power. And that's something I tell people, because they'll come to me, even if there's the same rate and they're trying to shop and, they're trying to do their due diligence. If they go to a house like you're describing and they put in an offer and it says US Bank on it, I don't think it's going to look as attractive. And if there's 3 or 4 other offers right now, like when it is competitive, it's not a small thing. It's a pretty big thing. It's enough to where a listing agent will suggest to their seller, "Hey, like we should probably pick this local broker. You can look them up. They have a bunch of good reviews, you're talking to." So it has more power, I think.
I could not agree more. And I don't want to spend too much more time dumping on these other options here. I will continue to dump though. And, we're taught part of our sales skills. When I call a client, whether it's a buyer or seller, it's not my job necessarily to get an offer accepted, whether I'm a listing agent or buyer's agent. My job is to get you to the closing table. And when, as a listing agent, I see a pre-approval from someone like yourself, I know that you're going to work to make it work and get us to the closing table. Whereas maybe a US Bank or Rocket Mortgage, it's rare that we're getting to the closing table, if not in the realm of the same day that I put for a closing date. So there's something to be said about how you are a person and not this large entity, and you really give a crap about figuring it out for the client, right? So
yeah, and to end on this last topic, I mean, Wes and I, we've had a number of buyers use online lenders. And me personally, James and Wes, I haven't had a successful transaction with an online lender. My most recent one was probably a year and a half ago. It was a nightmare deal. It was FHA, needed to turn to conventional, and it turned into like a 2.5 month transaction, which ultimately ended up being a failure. I tried to save it with another local lender, but it ultimately did not work
Yeah,
out. And
that's a
so
heartbreaker.
I'm sure Wes has the same stories. I just haven't. When I see like Bankrate or Rocket
Loan
Mortgage,
Depot.
Loan Depot, I get scared, and I always try. Yeah, and I always try to not necessarily persuade them, but hey, it's like buying a car. Go get some options. Go get options. But yeah,
Yeah, and I'm seeing this is what I'm seeing. People who have been in the retail space for their whole career, who have had the owners or whoever, their managers tell them, don't join a brokerage, that all the propaganda, let's call it. I've seen people move to the broker channel, and I can name a few right now who have made posts about how much better it is. So if part of it is, I'm not necessarily, slamming on the LOs. I think there's some amazing, awesome loan officers out there who are working for places that are at retail lenders who are very experienced, but their hands are tied because of the company comp structure, rule structure, hoops they have to jump through. In order to price match, it's practically impossible. I'm hiring. Come on over here. It's better over here, I promise. I'll hold your hand. It's headed in that direction. The brokers are definitely the broker channel is taking a lot of market share for sure, and it'll only continue.
Nice. I think that's good to hear. I'm happy because I prefer it. All right, so I have a question. It's going to be so basic. We have a lot of first-time home buyers that listen to this. We share this with our friends and our family in our spheres of influence, and there are a lot of first-time home buyers that ask me very straight-up, simple questions that might seem mundane to us. So I'm going to ask, if I am a buyer, I'm looking to purchase a home, what are some major next steps for me to do to be ready to purchase a home?
Yeah, that's a great question. I think that first-time buyers have this fear that they're going to connect with a mortgage person and they're going to hard pull their credit, tell them no, and kick them to the curb and laugh at them as they do it. But the mortgage broker's job is really to be the person who helps you get ready. It's awesome if someone comes to me ready, but I've worked with clients for 3 or 4 years that I give them a plan, check in every month, we keep it going, and they end up purchasing. A lot of it is consulting, scenario building, and our application, you can apply. I can soft pull credit, it won't hurt your credit, and I can set you in the right direction. Because a lot of people, like you're describing, are getting ready, but they actually don't know what it means to get ready. They might have a whole other area that they need to be focusing on when they're focusing on a different one. Like, so for example, someone could have a full-time job that's W-2, 40 hours a week. That's perfect. They might have credit issues that they need to work on a little bit. And what they do instead is, well, here's this great sales job. I'm going to go get into selling solar. I can make 6 figures. That's awesome. They start the job already. They've been on the job 6 months. They're making great money. Then they call me and I have to tell them, hey, I'm really sorry. There's 2 income buckets. There's steady and reliable W-2 salary, which we can use immediately. And then there's commission or variable. It can vary by $1. We still need a 2-year average. So now they've extended it for 1.5 years. So I think the best advice would be talk to your local mortgage broker so they can set you up with a plan. There's no drawback. It doesn't cost $1. Set that consultation up. In general, there's 3 buckets to being approved, and everything is about 2 years. If you have no credit, get a credit card yesterday and start playing the game and build up 3 credit lines so you can establish a history. And there's going to be assets. There's a lot of down payment assistance marketing stuff that I think is just marketing. The best thing you can do is plan on 3 to 5% of the sales price. Start saving. Save up as much money as you possibly can. It can only help you. Doesn't mean you need to use all of it. But I have people with $1,000 in their bank account telling me they want to buy a house. And I mean, we have earnest money that we need. We have appraisal we need. We have an inspection we need. I mean, you got to buy a washer and dryer probably. So seller concessions can go a long way, but when you try and save up 3% minimum, then you have something to work with. There maybe will be programs, but getting in a home with $0 unless you're a veteran, very tricky.
Wow, that was a great answer. Succinct at the end. I think that's great. the important thing that I heard, and I get where people are coming from when they don't, because I'm going to relate it back to us, they don't want to speak to a real estate agent until they're ready. Or maybe they don't want to speak to a mortgage broker until they're ready, quotes, to buy a house. And I think it's because people have this idea of the salesman, the used car salesman, the shifty, like, they're trying to take advantage of me somehow. And what you said is so important in that you're more of a consult and an advisor until they are ready to buy a home. And they won't know if they're ready to buy a home until they talk to you. And it's the same thing on our side. And, obviously when it comes to the finances, we're going to refer them to somebody like yourself. At the same time, sitting down with a mortgage lender and sitting down with a real estate agent, even if you're a year or two out, like James said, you're setting yourself up to do it correctly and know what pitfalls you might have. I knew someone, and I know there's people out there that are like, I make a ton of money and I've been working here for 5 years. I got $50K saved. Like, there's going to be no pitfalls, maybe, right? And I had someone that was like, this person's ready. It sounds like what they're telling me is ready. And then we go to the drawing board and their credit is just horrifying. And they had no idea. And now it's like, well, I'm quite sorry. This is not a possibility right now. Yeah. And they would have known that if they had planned ahead. So I think it's a very important point that you made to just give somebody a call. As you mentioned, soft pull of the credit. We're not hard pulling for that pre-approval. It's a couple points, bounces back real quick, and going to somebody like James gets you ready and tells you what bucket, as you said, you might need to work on and put more time in. I think it's very important.
Yeah, exactly. I mean, it's like what we do as real estate brokers. I mean, what do we do at the beginning of a client relationship? Either buyer or seller, presentation, consultation. So it's the same thing with you, James. I know you briefly mentioned it during your previous spill, but right now we're in a world of high interest rates, right? It's much different from 21 and 22. Many buyers, obviously, that's usually the number one question that I'm getting right now. It's like they're focusing on what's the current interest rates, what's your monthly payment, but I feel like sometimes, or most of the time, they're forgetting about the other costs that's associated with purchasing a house. And so briefly explain to our viewers and us, of course, what other costs and fees is out there for buyers to potentially fall into whenever they're taking out a mortgage.
It's a great question. So I remember when I first started in this, I heard closing cost and cash to close, and I was like, that's the same thing. So I think we forget how used to the language we are, and we can talk really fast, and clients hear that and they hear earnest money, down payment. It's like, dude, you are speaking Morganese. Like, it doesn't like make any sense to me. So you have your down payment, which most people understand what the down payment is. You have your earnest money. Now, I always call that like a mini down payment. That's to say, hey, I earnestly want to buy this house from you at 1% usually. Now, if you're going to put 5% down, there's 4% left. So most people understand that. Then you're going to have your appraisal, and that's so that the lender knows first the house is real, because these lenders are in different parts of the state, and it's possible they don't actually drive to the house. So determine it's real, that the value is where it needs to be. And then there's the inspection, and that's outside of the lender's world. That's in the real estate world, but people think appraisal is the inspection. It's different. I don't know the cost on that. You guys would probably know better, but at one point it was $500-$600. Now I hear it's getting closer to $700-$800. And then there's going to be the other closing costs that are a lot more common when people think about it. There's something called an escrow account, and it's a convenience account is how I describe it. It's used to pay your taxes and insurance for you in one lump sum so that you can get a lump sum discount essentially rather than paying it on your own. So they're going to grab some extra taxes, and usually it can range in Oregon depending on the time of the year and when they're due, but that can be anywhere from 4 to even 14 months of taxes. So same thing with insurance. It can be a whole year you prepay. So there is a time of year in Oregon where it's more expensive to buy. Technically, it's all the same, but it's more upfront. So in Washington, they pay twice a year, but in Oregon, it can go from 4 months all the way to, it's usually around October, November. It's a little bit more. So it's still your money, but so there's your escrow account, and then there's going to be your title fees. Those are pretty standard, usually a couple grand. And other than that, third party fees is what you call those. Those are all going to be the same. Then there's going to be any lender fee specifically. And the way I look at that and explain those to clients is what's the rate and how much does the rate cost? So in section A, there's going to be simply as possible, because when you send a fee sheet to a client, there's 37,000 numbers on it. If you look at section A, say, what's your rate? What's the dollar amount in there? That's how you can, as easily as possible, compare pricing. It's possible in the mortgage industry for fees that appear different to be the same. Underwriting fee, third-party processing fee, discount point, origination fee, all this stuff, lender fee. A client might see $1,000, then they might see an origination fee for $1,000, so it's $2,000, and then another client that says $1,500 on origination fee and say, oh, his fees are less, but really it's one is more. So there can be ways that it looks a little tricky. So in general, there's going to be your third-party fees like we described, the ones to pay your taxes, the title fees to close your house and make sure your title's clear, and then their origination fees are the ones that vary between lenders.
Gotcha. Yeah, that all makes sense. We started at the same place and we learned our scripts like good boys. And we were told that a good measure is to think you're going to need at least 3% for down and 3% for closing costs of the purchase price. That was kind of the rough measure. Obviously, that can vary. Would you say that's pretty accurate?
I'd say that's a little high, but it's probably good that it's a little high. It's a lot easier to start there and go down, and then you look awesome. Look how good our fees are, then start at, oh, here's your down payment, and surprise, here's your closing costs. That's hard for people to stomach. So
yeah, we can afford the couch now instead of having no furniture. I couldn't agree. Yeah, now that I've actually gone through it, this was me learning before I actually did anything. I've gone through it. I've rarely seen 3% on those closing costs. As you said, though, having more and needing less is better than having less and needing more. That's great. I'm glad you brought that question up. Now, I know Fong's going to want to ask it, Mr. Yahoo News Finance. What are your predictions?
Of this, because I'm a gut person.
Okay. I like it.
My gut has been pretty right, honestly. More than if I get super, super into it. But I just know how everyone talks and how everyone feels about stuff. And I think that rates are going to go down here in the second half of the year, but they're not going to go down enough for it to matter. That's what I really think is, I think people are really like lessening after 3 and 4%. And we've had brief periods of time here in the last 6 months with high fives, and they were very brief, but I think it brought people out, and it matters. But if I don't see us going to like 4.875 and everyone is refinancing their whole house, like I could see us getting down to about 6 flat and high fives. And it's not that doesn't matter. It's not going to, I don't know. I think it'll increase, buyers coming out, but I don't think it's going to be like a game-changing, holy crap, they dropped rates, because I think that's what we did in the past, and that was a problem. And I hope that the Fed people have learned from, like I was describing at the beginning, this whiplash thing. Because when they dropped rates, they were like, and it just flooded people. So I think it'll be a really gradual, I could see us looking up one day and we're like, oh, rates are at 6%. We didn't even really notice them just slowly moving down over the course of a year, rather than in like 2 months when they just launched us to the moon. From 3 to 8.
Yeah, I would agree with you, and I think right now a lot of the buyers, even though the market isn't so hot, obviously other than like small pockets within the Portland Metro or Southwest Washington, I think a lot of the buyers, they're still waiting on the sidelines. They're wishing that rates were back in 2020, 21, and portion of 22. But you made a very good point, and I would completely agree with you. I don't see rates going to. I don't even think they're going to go down into the fives. I think it's going to stay at 6 for at least for a few years. But again, who knows what Trump's going to push with Jerome Powell.
I agree as well. I have told multiple people that we should expect for in my mind, 2025 to ping pong up and down between 6 and 7. Just go pop, 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 back and forth. And we might stick around somewhere for a little bit. Obviously, the Fed's meeting tomorrow. Uh-oh. Now you know when we're recording this. I don't think they're going to come out with a cut. Do
Yeah, we'll
you
see.
know more? I mean, I this would be guessing. I don't think so. Now,
Well, that's the other funny thing with rates is it's already priced in. So whatever the lenders think is going to happen tomorrow, if it happens, the rates will stay the same. So if they think it's going to drop and it drops, people are going to be calling, hey, the rates dropped, and they're going to be exactly the same as they are right now. But if it goes up and we were not expecting it, that's when it really, it's just kind of funny how that works. So it's almost like the Fed is marketing for us when it does what it's supposed to do.
makes
It
sense.
doesn't really change the rate, but it gets people to, want to give you a call.
Definitely the speculation in there, absolutely, from you guys, beforehand. And it does have them give you a call, right? Good Lord. Now, something else is recessions usually bring lower interest rates. Could you explain why the heck that is?
Yeah, I don't know if I can, because 2008 made no sense, and nothing has been making any sense, honestly.
That's a good point.
I'd say the theory is because you want people to spend more money. So if it's a recession is happening and everyone's kind of freezing up and the economy is stalled, I think of it as just being iced over, then we need to get things moving again. And so we're going to encourage buyers to come out and swipe those credit cards, and it'll make it easier on them to do so. So they're kind of incentivizing people to buy. So I think that's why. But I have seen in the last 3-4 years, nothing make any sense to me. So the way the rates are tied to the 10-year bond, like it hasn't been operating the same as it has and what we've grown used to. So I think that's why I've moved into a gut mode, is I'm like, nothing makes sense anymore. So I don't feel like I can really tell you what will happen, because for all I know, they'll do the opposite.
I love hearing that. James, I just want you to know how I judge how good a lender is when they give me something like that, where they're like, honestly, I don't know. I don't have a crystal ball. I love hearing that. I'll have a crystal ball. I'm like, thank you. Reality has struck this person. Nothing has made sense at all.
Yeah, I mean, James is not bullshitting us. And I like what you said too. You said you're relying on your gut, your intuition. I'd much rather rely on intuition of a 9-year vet who's been through the weeds versus someone that's newer in the business or online lender, because which gut would I rather choose to work with? So let's talk a little bit about maybe some tips about that you can provide to buyers, like first-time buyers, millennials who are entering the market. What would you say, James, is probably a few overlooked financial mistakes that buyers tend to make whenever you see their application and go into the mortgage process?
Yeah, 100%. So I think one is going to be those car payments. So in general, how mortgage works is it's all a debt to income ratio. So a lot of people will call me, and the keyword there is ratio. So they'll call me and say, I make this much, how much am I approved for? And the other side of the coin is going to be the debts. A lot of people start making good money and they go get a car payment that's $800, and it really, really, really does affect your buying power. It can change you from being able to buy the house at $600 to where now you can afford like $450, because it's all going to be a ratio. And the bigger the car payment compared to your income, it's going to hit even harder. So I think if you want to buy a house, you want to maximize what you can purchase, try and either pay off your car or wait on the new BMW and stick with the Yaris that you have that's paid off, and get the house, make the house payments. I'm not a financial advisor, but what I would do, make the house payments, feel how your budget's working after you get the house, and then decide, okay, can I swing that car? Can I get the car after? That's what I would recommend.
It's crazy, but people that I talk to, and I'm sure, Wes, you get this too, I'm asking about the common question. Hey, what are your liabilities looking like? Student loans, car loans. And I feel like a good amount of people have some high car loans, big payment. But yeah, do you see that too whenever you're talking to people? Large car payments?
Oh yeah, all the time. Not only do I see large car payments, I mean, James, like you said, see, again, that's why it's so important to talk to someone like James or like us to get you in front of someone like James, because people don't think about that. They're like, I'm making bank, I'm making a lot of money. Wow, look at me. I finally hit six figures. I'm going to treat myself to that BMW. I'm going to treat myself to that Range Rover. All of a sudden, I got an $800-900 car payment. I'm going to go buy a house, right? And they don't understand that they're looking at what the mortgage plus your car payment would be for your debt to income ratio, not just the mortgage for that 50% or whatever it is nowadays. Yeah, on top of that, I think it's interesting because I talk to a lot of people per day. It's interesting how many people don't even know all of their liability expenses. Whenever I go, hey, obviously, what's your income? We go through this in our script. And what are your liability expenses? I would say the same thing. Think car payments, student loans, credit cards. And car payment, usually they know, right? Usually they're like, I know it. Or maybe they're, I'm not sure. The credit cards, I don't think people often know like what they're paying. And then the student loans, a lot of people don't realize. They're like, oh, I'm not paying my student loans right now.
Yeah.
I don't think that matters.
Yeah, we have to use 1% or 0.5%. Yeah, I've seen some crazy student loans, like numbers that I can barely believe. Those are, 0.5% of the total balance. So even if they're in deferment, they still count. So there's that. And I think the other side with, so there's debt, but then there's also credit. And I think if just the cheat sheet is keep the balances on all your credit cards less than 30%, and that will really help your score. So keep your utilization down, because with a conventional loan, like the majority of people have, credit matters so much. So if you have your cards maxed, and it can even happen to where someone has a $2,000 balance, like available limit on their card, and they have $1,500 wrapped up on it, and they could pay the $1,500 off no problem, or at least down below 30%, but they're not thinking of it. It's like, doesn't really matter. Having your cards utilized like that can really tank your score. So if you want to get yourself ready to buy, it's going to be watching out for the car payments, but then also like get your credit in a spot to where you can really maximize it. Because you might be at a 720, but you just have a couple cards that you need to pay down, and you're really sitting at a 680. And that difference in mortgage pricing is going to be major. And so time is a factor here, because credit for no reason moves extremely slow. So if you pay those things off, it's not going to update your score until like 2 months from now for no reason, because credit is a racket, but that's a rant for another time.
Heck yeah.
I always try and tell people, like, make time work for you, because if you find a house and you're like, oh, let's rapid rescore, let's pay this off, let's do this, trying to like get your score where it needs to be to buy immediately, that's not that fun to do, and it might not work. But if you have 6 months where you're starting to be like, okay, I want to get ready to buy, like keep your cards down, let your score sit where it needs to sit, make all your payments on time, and that way time is working for you in relation to credit.
So well said. Well, I think, we're coming up on an hour here. I think we've had some fantastic nuggets from you, James. I cannot tell you thank you enough, honestly. This has been absolutely amazing. Hearing from someone other than us, especially someone that has expertise elsewhere. So it's so great to hear. Do you have any, parting things for our listeners? Anything that comes to mind that you just want to send them off with? And then, Phong, I'm going to say the same thing for you, and then we'll do one as well. But James, do you have anything in mind that you want to?
Yeah, absolutely. First, I just want to say thanks for having me on. It was a pleasure. I had a really good time. An hour passed super fast. I do have something I want to tell people, and I think that the world right now with the media is making it seem like you can't buy a house. It's making it seem like you'll never do it, and it's really hard, and it's only for the dinks, double income, no kids, and you can't do it. I've had a lot of people come to me, even people who have come and work at my company, who said, oh, I'll buy a house in 10 years. And I'm like, dude, yeah, right. We can totally do this. Anyone listening, any person can buy a house. It does take work. It does take focus. It does take sticking to something. But if you have a good team like you, Wes, and you, Phong, and myself that can guide you, it can cut that time so very quickly. So don't hesitate to reach out, get a plan going, but you can absolutely own a house. And with a good team, there's a lot of stuff that you can do to make the process not just smoother, but a lot better. Realtors are not created equal. There's a giant spectrum. So finding realtors like these two who can negotiate seller concessions that can massively reduce your payment because you can do a buy down. They can find you an off-market deal. There's lots of stuff that people can do within the real estate space that can give you a great opportunity. Get connected with your team, and you absolutely can buy a house no matter what they're trying to tell you on the news.
Yeah, love that. I think to end on that, my spiel is I think if a buyer's trying to buy a house in today's day and age, it is tough. Let's be honest, it is. Just takes a little bit of sacrifice, though, and hard work. Creating a team, like you said, whether it's Wes, myself, or James, to get you across the finish line. Right, Wes?
Gosh. Yeah. I think it's funny because I was exactly going to say the same thing as you two here. My biggest takeaway from everything that James had to say to us is, and I tell my clients this when they're shopping, you're assembling a team, and I say it. You are assembling the Avengers. There's you, there's me, there's your mortgage broker, there's your inspector, and you need this team that's willing to fight for you and figure this out to get you to the closing table. And I think a takeaway here is that really good people at what they do like to work with really good people at what they do. And I think that speaks to why, Phong and James, you've been working a lot together. I think that's awesome to hear. Assembling a team. And then again, a big takeaway that I do want to lean on here is don't wait until the last minute. James mentioned it a couple times in a couple different scenarios. Don't wait until the last minute. Even if you're thinking about buying a home in a year, you want to be ready, because let's say that perfect house comes along and you're not ready, you missed. So you got to talk to them now. And that's what we're here for, is to help you out.
Love that. James, where can people find you, man? What's your socials, website, all that good stuff?
Yeah, 100%. dc-lending.com. You can find my website. My phone number's on there. Or if you just Google DC Lending, don't need a dash there. Google My Business has all our reviews. Check them out. And then I'm on Instagram, DC_lending. And then my own personal one, James_M_Sands, SANDS.
Actually, Wes, I think I found someone who can probably outbench you. James.
Who's that?
Well, we'll see. We're going to do it.
Quick little story, James. Wes and I had a small competition, and he totally obliterated me in a flat bench barbell. I think he ended up getting 345. I didn't even get 3 wheels. I only got like 285, and then I quit because I was like, my shoulder hurts.
Was that the one that I did? Let's see how many reps at 275, and I did 12 for you?
Yes. Yeah.
Hey.
But James is avid. He
let's
does those powerlifting.
Let's get a lift together. I'm down to lift. Are you guys at O'Malley's?
I'm at O'Malley's. Wes is at F45.
Nope.
He does a lot of.
Nope, that's okay.
Orange Theory?
Wait, nope.
24.
Nope, it's all good. It's all good. Intrepid. It's a small gym. It's near my wife's work. I also have a bench in my garage. But without that said, I love to hear that. Again, I think the discipline in work shows up the discipline in the gym.
100%.
1 for 1.
Yeah.
So awesome. Definitely follow James. Find him at DC-Lending.
Yes, sir.
All right. And this is Wesley, your buyer specialist, signing off for episode 10.
And this is Phong Tran, your seller specialist, also signing off. James, I appreciate it, man. See you guys on episode 11, okay?
Thanks so much. All right. Bye-bye.